All right, hello guys, and welcome to Accurate Peeps. Today we are going to be looking at lesson 4 of the beginners course. As you all know, we started the beginners course last week, and we are almost getting to the end. We have about 6 or 7 lectures at most, and this is lesson number 4. So we have about 3 or 4 more lessons to complete the beginners course, and then we go to the intermediate and advanced. Actually, I wouldn't have conducted this beginners course. So this is the only time I'm going to be conducting a beginners course like this, talking about all these things like what is peeps, and because actually they are not so important to to whatsoever we are going to be doing on the chat, though you need the knowledge about it, especially when you are complete beginner. All right, but then those of you that already have knowledge in this field, these lessons are actually not necessary for you. That's why I don't say on the page that you guys is important, go and watch this lesson or not. No, it is for complete beginner. So anytime we are having new um lectures after this year's beginners course, there will not be any beginner course because I always refer them back to this. Anybody that says he or she is a complete beginner will be referred back to this particular lessons, 2025 lessons, because I can't continue repeating. It's boring talking about 24 hours, the forex market is being traded, all those stories. Okay, so maybe those of you that wants to read these theories, you can go to this site called babypips.com, okay, and learn from there. It's free. Okay, it's free. If you come here, you can learn about all the forex for beginners and all those things. It's free of charge over here. Okay, what is pips? What is that? Blah blah blah. Okay, you can learn all of them from baby pips. It's free of charge. Just sign up and then you learn about those stuffs on their website. Okay, so guys, that is quick, something quick over there. But notwithstanding, let's come to today's lesson. So with today's lesson, it is a little bit important for you to understand whatever we are coming to talk about today. Today we'll be looking at orders. Okay, the various orders that we have. All right, so first of all, before we look at the various type of orders we have, the question you should be asking yourself is, what are orders in forex? Okay, when we say orders in forex, what are we talking about? What does it mean? So we'll quickly look at that, look at what orders mean. So when we talk about orders in trading or in forex, okay, we are talking about instructions that are given to what, to a broker to execute a trade on your behalf. As I said, the broker is the intermediate between us and the global central market. So if we want to, let's say, buy an asset, we give the broker a command. The command is for it to buy. Okay, and that command, we refer to it as what? Orders. You are given an order by your boss to perform an activity. So you are giving orders to the broker to perform certain tasks, either a sell task or a buy task. Sorry. Okay. So they are what? Instructions that we give to the broker to execute a trade on our behalf. These orders specify details such as the currency we want to trade, the currency pair that we want to what? We want to trade, the lot size, okay, the lot size we want to use, for the trading. The aside the lot size, we also specify the entry point, the exit point. Now the exit point is divided into two. That is the SL and the TP. Okay, so we specify the currency pair, the lot size, the entry point, and the exit point, which are made up of the SL and the TP. You already know what SL is, you already know what TP is, because we have already looked at those things when we're doing the terminology. We explained and defined them. Okay, so I will not go into talking about them in this particular lesson. All right, so now that we know what an order is, how are these orders uh, given, or these instructions given to the broker? So mostly these uh, orders are executed based on what? Um, each individual's own trading style, or some people will say concepts, or strategy. Okay, whichever term you want to use. All right, so these orders or these instructions are executed or triggered based on the instructions given using the style or the concept or the strategy you as a trader you are using. Okay, so now we have different types of orders. Okay, so we are going to look at each of them and how they are what those instructions are executed. Okay, good. Now, so types types of orders. We have what we call market order or execution. Okay, so we have what we call market order or execution. Now, when we say market order or execution, this type of what order is is executed immediately. Okay, instantly. So this one is executed what instantly at the current market price, and we define what current market price is during the terminology. So if you have forgotten, you can go back and look at the definition. All right, so if you want to buy, if you are giving a buy or sell command to the broker, that command at market um order or market execution, then that order is executed instantly. It doesn't delay, it doesn't wait. Immediately you press the buy or sell button, that order goes through without any delay. So that type of order is what we refer to as market order or market execution. So sometimes you hear most of your mentors or your signal providers saying buy, let's say, euro USD at CMP, which means current market price. And once they say that, they are trying to tell you that the order being performed is market execution or market order. The second uh, major type of orders is the pending orders. Okay, so in all we have about 5 types of orders. We have the market orders, the pending orders, the stop loss orders, the take profit orders. So the take profit orders and the stop loss orders can be put together as exit orders. Okay, exit orders. And the pending orders and the market orders can be put together as entry orders. Okay, entry orders. All right. Then the stop loss order, the take profit order, and then the trailing stop order are together known as what? Exit what? Orders. All right. Now, let me talk about each of them. So when we take pending orders, we have 2 types of pending orders. We have the sell limit and the buy limit pending order. These two. Sorry, these two gives us sorry, these two gives us the limit order. That I mean to say 2 types of limit orders. So pending orders we have 2 types. Okay, we have 2 types: the stop orders and then the limit orders. Okay, so let me arrange this thing well. Let me so that so pending orders, we have the limit orders and then the stop orders. Okay, now under the limit orders we have the sell limit and the buy limit. Under the stop orders we have the buy stop order and the sell stop order. Okay, now when we take the sell limit, okay, when we take the sell limit, for instance, when we talk about sell limit, we are talking about a sell order that is placed above the current order. So sell limits are what? Placed above the current market price, MP, standing for what? Market price. And buy orders are placed below the current market price. So that is the difference between a buy limit order and a sell limit order. Now, when we take the buy stop, okay, then we are looking at an order that is placed above the current market price. So a buy stop is placed above current market price, and a sell stop is placed below the current market price. So sell stop and buy limit, they are placed below current market price, and sell limit and buy stop are placed above the what? The current market price. So take notice of that. Now we move to the next thing. That is the I call it them the exit orders. The what? The exit orders. And I said we have 3 of them. Okay. We have the take profit order, we have the stop loss order, and we have the trailing stop order. Okay, so we have the TP, the SL, and the TS orders. Okay, let's look at each of them. When we take the take profit order, we are looking at what? An order that is set to automatically close a trade when a specific profit target is what? Is reached. So, sorry, this closes trades automatically when the profit target is reached. Okay, now when we take the SL or stop loss order, then we are looking at an order that automatically close a trade when a predetermined price is set to limit losses. So this one is set to close orders automatically with a predetermined price to limit losses. You get it? So SL limit losses and TP triggers automatically a profit level that has been what? Reached. Okay. Now when we take trading stop, trailing stop, trailing stop order, then we are looking at a dynamic stop loss order that moves with the market. Okay. So what this does is that as you are earning profit, this order will be automatically pushing into profit. So let's say your profit is at this point. This order will now push, let me use the red, will now push to this side to lock this your entry. This was your stop loss. That was somewhere here. But immediately we go into profit. Let's say we are 10 pips. We are 10 pips in profit. This SL here will now move to this point, maybe with let's say 3 pips profit. Now, when price move, let's say 25 pips, this SL will also now move to around this point to now secure the 10 pips profit for you. Now, when market, let's say after reaching 25 pips, decide to reverse, it will now close your trade here with 10 pips profit. That means even if market decide now to come down like this to your original SL, you will not even lose the trade because already your SL has jumped from here to this point, giving you a 10 pips profit. All right. Sometimes too, trade can close here and then now continue to your main target. So the use of trading stop depends on you, the individual, your risk management, whether to use it or not to use it. Okay. So that is the three different types of exit orders that we have, and that is the 5 types of what um orders that we have and we'll be making use of in the what in the forex trading. Now, what are the importance of limits? So let's look at the importance of limits and then we will call it a day for lesson 4. All right. So when we take limit orders. Okay, they are very necessary or very important in trading because they give the trader more control over their trade execution. Now, the first good thing about limit is that it gives you what? Better entry and exit what? Price. Okay, so if you set a buy limit, to be able to place it at the exact point that you want the trade to trigger. If price gets there, to trigger. If price doesn't get there and continues, it means you've missed that opportunity. You wait for another one. Same apply to what? Sell limit, and then also buy stop and what? Sell stop. The second thing is that it helps you to what? Avoid emotional trading. Avoid emotional trading. So since the order is set in advance, okay, traders don't have to make impulsive decisions based on emotions or sudden market movement as to whether they should press the buy button or they should what? They should press the sell button. Everything is automatically what? Executed. And then the third thing is that it help reduces slippage. It reduces slippage, because the trade triggers exactly at where you want it to what? To trigger. So market orders can suffer from slippage, execution at a worse price than expected. When I say market orders, you know what market orders are already. We talk about it during the types. So if we are placing market orders, sometimes by the time you are pressing the button, there is a retracement in movement because the market is very quick. Okay, but then with limit orders, if you say execute at 1.0545, immediately it gets there, execution what? Takes place. Execution what? Takes place. All right, but with market orders, you might want to buy here, but before you know, price will go and execute at 1.05 56. Okay, so we call that slippage. So limit orders help us to what? Prevent that, and they also saves time. Okay, saves time. All the time you spend waiting for your order to get to your zone before you what? You trigger price is saved because everything is automatic. You don't need to what? To monitor it. And the last one is that it helps us with what? Risk management. Because you already know in advance how much you lose if your trade hit SL and how much you earn if your trade hit dip. You are able to calculate to know the percentage of your account you are risking to the reward you reap. So you don't do all those things um during the period you want to execute, because it's a pending order. You are able to do all these decisions before placing the trade. Unlike market executions, when the thing get there, you have to press the button. So you will be in all sort of mind battle. Should I go in now? All unnecessary battling of the brain. Okay, so guys, this is the end of the lesson on orders. Hope you like it, and I'm looking forward to meeting you for lesson number 5, where we'll be looking at the candlestick anatomy. This is very important. Okay, where we'll be looking at the power of 3, basic. You go into the power of 3 more when we start with intermediate and advanced courses. All right. So guys, I love you. See you again in the next lesson. Bye bye.